Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Now guys, let's take a look at the gold market. So as you can see, the setups that we have discussed on the intraday charts in the previous week actually were destroyed, all bearish setups, because market in general have tried to make some preparation for downward continuation, but all of them has been crushed by first Yellen's dovish speech to the Congress, second poor United States data on Friday, when we have seen really poor numbers of the consumer price index and retail sales. These indicators, this statistics is really important because it's a bit more durable compared to more volatile employment data, and it's the inflation data and the consumption data are more stable. That's why when you see the dovish numbers, and it's not the first time in the current year, so it's inflation in the recent months really was released a bit worse than expected. When you see this data, it really could make a significant impact on the perspective of United States dollar strength, and particularly about these moments Yellen has spoken in the Congress, and that really increased chances and that maybe Fed indeed will not raise rate anymore in this year, as we have talked previously, and you know our position that Fed should raise rate only 2 times in this year. So currently, guys, it's a bit early to speak about the major reversal in the gold market, because here actually we do not see it yet. Because on the sentiment analysis shows that gold market still stands bearish. SPDR fund has lost approximately 12 or maybe from the 12 to the 15 tons in this year, and in general it's approximately 40 tons outflows during the month. So it's really significant dropout, but actually we see some big changes on the forex market and the bond market as well, but that's why it really could make impact on the gold market as well. But on the gold market, the signs are a bit weaker than on the other markets. So that's why currently, guys, we do not want to treat this action that we see recently as some major reversal or something of that sort. It's better to treat it as a retracement. Maybe it will be a bit higher, but it's too early to speak about some big changes here. To be honest, for me, it's a bit surprised why market has trended up right from this area. Because if you remember, 1225 here was major confidence support. And following the technical analysis, it's more logical to the market was to reverse up from the 1220, 1225 area. Because here, guys, we also have the ABCD pattern on the 4-hour time frame chart. It's very good pattern. It's 100% extension. Ultimate target also has been completed 1221 and will bring an agreement. So this was very strong support, but instead of that, market shows minor retracement and dropped. Here, guys, it's very difficult to understand why upside reversal happens here, because actually here we do not have any FIB support, nothing. So one thing that I could just draw here, some kind of the ABCD pattern down, maybe something of that sort has been completed. That was the reason why market has dropped. But this is too shy ABCD patterns. CD retracement is very small, so another 3/8 of this AB leg. So it's very, very, very difficult to treat it as full ABCD and use this target as a reason to break out of the strong confidence about an agreement on the daily chart. So that's a bit not quite natural behavior. So it's very difficult to explain. And right now we see that bounce up starting. So what we have here, nicely looking bullish divergence. Also, trend has turned bullish, guys, and what's more important is that market has erased our grabber here that has been formed on Thursday. So that tells that definitely the short-term sentiment has changed. That's why as a potential target we could point on this level to 1240 is confidence resistance on daily that stands in agreement with this trend line. This gold market's habits, and it's really like to retest broken lines previously. So that's why So retesting this area is very probable. Besides, do not forget, this consolidation was around former conference support. The 1240, 1245 was former conference support. So also market could retest it from the opposite side. This also will be daily reversal. Sorry, overbought. That's why that scenario around 1240 will be probable destination of this action. So what we see on the intraday chart, on the 4-hour time frame chart, we see first the hand shoulders, large hand shoulders pattern that indeed has been formed. Recall what we said on Thursday, that upward action starts from the minor hand and shoulders. But at the same time, market could form the larger hand and shoulders here. Recall the silver line that we have discussed on hourly chart on Friday morning. So we said that market, if it will break it down and start move down, that's probably, it will mean that these hand shoulders will not be formed. But as you can see, this hasn't happened. Market here skyrocketed up. Also, it has broken our sequence of the harmonic swings, but what's more important, the downward channel that market stands here also has been broken up. So here we have definitely bullish sentiment. This is acceleration candle. It's also a good sign of the acceleration, supports the overall momentum to the upside. This is a good sign for the bulls. So what targets do we have here? Based on the hand shoulders pattern, we have two targets. First one is 1235. Stands approximately slightly lower than this confluence, while take a look. Another one is 1618, still 1248, is slightly higher than the confluence. Mostly close to this area. So none of them totally coincide with the confluence support, but still stands around this area. So around 1240 of these two targets that we could keep an eye on in a common week. For those of you guys who are thinking about going long, taking the long position here, I think that maybe it makes sense to wait deep retracement. Why? Because take a look, that here, this candle up, market has formed reversal swing, because inside of the channel, we have the sequence of lower lows and lower highs. And the sequence was valid right till this moment. So here we have the lower high, but here we have the high low and high high. So that's why that swing up is a reversal compared to previous swing down. So it means that the chances on the deep retracement here are very significant. So here we could get some kind of the ABC retracement on the intraday chart, something of that sort. As a result, we could get Gartner's 222 buy pattern or something that sort, compared to something that we have traded on the Great British Pound last week. So it really could bring the chance to take the position with the acceptable risk. So that's the trader's proverb. So when you see the reversal swing, take the first ABC retracement. This just confirms the idea that markets across the board, all markets, forms ABC retracement after reversal swing. So this happens as a rule. So not always, of course, but as a rule. So that's what we see on the gold market. Although sentiment in short term really has changed, but we think that let's focus just on the 1240 yet and not treat it as the major reversal. And after that, we will see what will happen.